Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the equity markets around the world pretty much crashed lower, and at this point, we're set to open on a very wide gap lower, and we know that the sell side is in control across multiple time frames. The risk in this type of market is that at some point, the market will reach a support area where value buyers will jump in and we'll see some upward momentum. It's just a matter of where that price is going to be. And it's very risky trying to guess exactly where the bottom is going to be in a market like this, which is essentially in crash mode. And we have seen consistent high volume selling throughout the entire session so far. So instead of trying to pick the bottom and looking for long setups in a market like this, which is very high risk, it is better simply to focus on short setups. So heading into the open, if we are holding below 1075 to 1275, that tells you that we are holding below the overnight balance and the sell side is in firm control. In the event of a break above 1075 to 1275, that would tell us that the market may have found some equilibrium and we now could be heading higher into the 18 to 1950 and 2275 to 2475, and those are spots where sell side can still be active. But we're running in such a high volatility environment that even on the short side, ideally you want to enter short once the market is short-term exhausted instead of getting involved in the middle or getting involved at a price which doesn't really give you a lot of leeway in terms of allowing your trade to work out. So we know that there's a lot of risk in buying this market, but there's also risk in selling the market because it's trading at such a low price. We're already opening down, somewhere between 60 to 70 points. So the question is, how much more downside is there? And again, I don't know how much more downside there is in the market. We could break 92 to 94 on the downside and head lower. So far the market has found some buyers at that 92 to 94 area, and perhaps we are going to base now and balance. But again, we don't know. Once the market opens, we could get another wave of selling. So the safe strategy is still to play a bit defense, but focus more on shorts and be very conservative and cautious on the long side. It's just that there's so much volatility that, getting a 10 point, 20 point bounce is really nothing in this type of market. And we know that in bearish markets with spike volatility, the rips higher can be pretty violent. So, in this environment, the best thing is to be selective and pick your spots. Still focus more on shorts. Take the short side, give it some time, some room to work out, and after that, once the market has moved perhaps 4 to 6 points in your favor, then start playing a bit more defense with that position. Tightening up the stop a bit. If it doesn't work out, that's okay. Short again at the next zone or the next key inflection point, and then look for a move lower. Because even if we get some buying here, most likely we're just going to balance in the lower part of the overnight range, and we're not going to see any kind of reversal. This is a very bearish move. Multiple time frames are in sync on the downside. This is a very large balance area breakdown. We've broken through major support in the overnight session, and getting a reversal off of this type of move is very, very low probability. So the focus is going to remain on the short side. On the downside, we don't know what the floor is going to be in this market. 92 to 94 could break for a move down to the next area at 82 to 84. We have an open gap at 77, 75, and the support zones below are valid and active, but they are better used as targets rather than spots to go long. Now, if you are very exhausted into a support zone, because of this spiked volatility, you can get pretty decent bounces as well, but we just have to be more careful and cautious on any longs. It doesn't mean that we can't consider longs and that longs are completely off the table, because in this type of market you will get some decent bounces too, but you do want to be more conservative and more cautious on that side. So that means let the market get really exhausted into a zone and then perhaps time it at the zone and try to get the best possible entry. Longs are going to be tougher in this market to trade, and that means you have to be careful with the entry and the exit. Once you're getting a quick 8 to 10 point, maybe 15 point bounce, then just take profits. The good thing is that when you have so much volatility, that also means a lot of opportunity. And taking one or two losses or three losses along the way is not really going to be that big of a deal because in this environment, you should be using slightly wider stops, but they're not going to be so wide as compared to the volatility that we're seeing, right? So normally you might be using a 2.5 point stop or a 2 point stop. Now you might have to use a 3 to 4 point stop. So your stop size has gone up by a little bit, but your target has gone up from 7, 8 points to possibly 15, 20 points. So the risk reward is still fairly good in this market, and it's actually much better than it was last week. So plenty of opportunity, but be selective. This is a market that has, for the most part, has been in crash mode overnight, and that theme can continue in RTH. So it does require some patience to allow the market to get to your price. Overnight, this 1075 to 1275 area is very key just because that's where the market balanced. As long as we're holding below it, we know that the market is very bearish. A break above it could get us some upward movement into 2275, 2475, 27, and then really even spotting a top in this market is not that easy because of the expanded volatility. But the strong area of resistance overnight is 4075 to 4275. That is very key. It was key on the larger time frames as well, and we just sliced right through it. So this is going to be a very key zone, but it's just unlikely that we'll see that big of a reversal when the market is this bearish. So keep the focus on the short side, be conservative, cautious on long setups. Don't try to pick the absolute bottom in a market like this because you don't really know where it's going to be. It's okay to play the bounce. Just I think it's very risky to think that you can spot the absolute low of day when the market is selling off, and not just the S&P, but across the board. Everything is selling off. So be careful on the longs. Focus on the shorts. Play defense even on the shorts if it's at an aggressive price, and I think you'll do just fine. So those are our main ideas heading into the open. Let's see if the sellers can hold ES below 1075 to 1275, and we'll take it from there.